how often should you actually talk to your accountant? And if you only talk to them once a year as you're signing your tax return, is that necessarily a problem? Full disclosure, accountants aren't exactly known for being the life of every cocktail party, but we can help you make better tax and business decisions. So when you reach out, we know it's not a social call. Short answer, there's no set optimal number of meetings. For some PCs, once a year is genuinely enough. What I do care more about is timing. I would much rather hear from you before a major decision than after it. Now, most of what an accountant does at year end, we look backward. We take the year you already had, we do our accounting magic, and we file it. That work matters, yes, but the year is already closed. Planning has to happen earlier, ideally before the decision itself. And that's because certain facts get set in stone the moment you act. Whether a transaction happened at all, the date it happened on, and what the signed paperwork says. Once those are set, there's really nothing an accountant can do to change them. Now, small stuff gets cleaned up in the books all the time. How we classify things, whether or not a small purchase was really corporate, or if we consider that personal. But let's look at an investment property. However the title was registered is probably how it's going to stay. Changing that isn't just an accounting entry. Same with moving money. The date a transfer happens is the date it happened. And a really common one I see that stings when you miss it, the RRSP contribution window. Once it closes, you can't reach back and deduct a new contribution against last year's return. That ship has unfortunately sailed. So here's what I generally recommend. A minimum of one touch point at tax filing to make sure you understand what you've just signed. Ideally, another real planning conversation before your corporation's year-end closes to check on things while there's still time to act. And certainly a big question, a quick question before anything big. A major purchase, a new commitment, a change in how you pay yourself. Beyond that, you really don't need a standing monthly meeting unless things are wildly changing every month, which is not often the case with PCs. So wrapping things up, no, you don't have to run every decision past your accountant, but for the handful that are hard to reverse, a quick double check, even just an email, is usually worth it before something is set in stone. I hope this was helpful. Thanks for watching, and I'll talk to you soon.